U.S. stocks finished higher on Friday, ending well off their lows, with the Dow and S&P closing marginally higher, while the Nasdaq added 0.5%. Comments from President Donald Trump gave markets a lift after he said there will be flexibility on tariffs expected to begin in early April, and that his top trade chief plans to speak with his Chinese counterpart next week. Trump also reiterated his plan to use tariffs to narrow the U.S. trade deficit with China. Logan Capital Management portfolio manager Bill Fitzpatrick says in a challenging environment like this, investors have to move away from mega-cap tech stocks that have soared over the past few years.
I think it is fair to say this is a stock picking market, and I think the lesson for investors today is to focus on diversification. Leadership was very narrow the last couple of years. And I think now is a pretty good example of, why you maintain diversification, why you're in value stocks, why you're in international equities. And that discipline is being rewarded year to date, and we suspect that will continue.
Stocks on the move included FedEx, which slid about 6.5% after the package delivery firm cut its full-year profit and revenue forecasts, citing continued weakness and uncertainty in the U.S. industrial economy. Shares of Nike lost about 5.5% after the sports apparel maker projected a sharper decline in fourth quarter revenue than analysts had anticipated. And Boeing rose 3% after Trump awarded the plane maker a contract to build the U.S. Air Force's most sophisticated fighter jet, beating out rival Lockheed Martin, shares of which fell nearly 6%.